I want to go through the bond market right now. Let's turn short duration first. Overnight repos out to new highs, well out over 1.1 trillion. The 2-year yield. I'm sorry, Lisa, that tells me some information from 0.20 out to 0.24 in the 2-year right now.
And this is the big question, actually, with respect to taper. It's how long is it going to last? What is the plan? What is the connection between the tapering of monthly bond purchases with the schedule for when they raise rates? And it seems like people are perhaps upgrading their forecasts for that touch. But honestly, Tom, it's been all but a flat line, right? I mean, the threshold for the Fed to move, to raise rates, to tighten in that level is so high.
Yeah.
And so, again, a key question tomorrow with Fed Chair Jay Powell, how much will he disassociate the idea of taper from that rate hike that many people don't expect anytime in the near future?
Well, that'll be easy language for him, but he's got to confront a 134. I mean, if you go 112 to 134, call it 15, 20 basis points, and you add another 20 to that, do it again, you're out to 150, 160, and then the market tells him what to do versus him telling the market what to do.
Yeah, Bob Michael of JP Morgan yesterday saying that one thing giving markets confidence is that the Fed will respond if there is a hiccup, and a hiccup could just be a sell-off, and we've seen that. So at what point are they backstopping the market indefinitely?
Francine in London says, do some currency data. Okay, we'll do currency data for Francine. Here, sterling right now, 137.44, and sterling. Francine in London demands, Notting Hill, demands that I do euro sterling. It's 0.856 Michael Spence. I don't know what that means, but that's what she said to say. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg Surveillance. Good morning, everyone. Great that you're with us. John Farrell off, Francine Lacroix in for John, Lisa Bramwitz, and Tom Keene. Red and green on the screen. Not much going on. The VIX hasn't moved since time began. 17.44. Yields are higher. We notice a 2-year yield of 134, rounded up to 135 right now. That is a substantial 3-day move into this Thursday. We'll see what happens here off of claims. At 8:30, dollar quiescent. Euro dollar we're watching really legging out for that 116 print for a cup of tea, not coffee, out to 117.73. So on the edge of 118. We'll watch it on euro as well. Right now, someone who has a wonderful optimistic cast on the American economic experiment, Drew Mattis joins us from MetLife Investment. Drew, thank you so much for joining. You have such an optimistic view. What is your view on GDP, say, 12 months out? Is the gloom crew overwrought?
They're actually not. It's the people who are getting very excited about things who are kind of overdoing it. If you look at everything we've been through, it's not clear we went through a recession. So therefore, it's not really clear we're going into kind of a recovery. And by that, I mean a normal recession, normal recovery. We're watching a few things pretty carefully. Obviously, the restart of schools is going to be important to the labor market. If you look at all the people who've left the labor force, they are heavily weighted towards single people. So what's keeping them out of the office is, healthcare concerns, childcare issues, and probably to some extent the government benefits that are now expiring. So we need to see how those people re-engage. We need to see the supply chains begin to function well again. And none of these things have happened yet. So I think people who kind of came into this year thinking we were going to see 7% GDP growth, they've now taken their number down. The Bloomberg consensus is now all the way down to 6.2. At MetLife, we're at 5.5. And I've been there since the start of the year, and I'm pretty happy to stay there.
I mean, it's a nice trend down, to say the least, in the labor economy. Now, Chairman Powell's got to fold us in. My basic take, Drew, is Chairman Powell does not have enough information to make a splash in this speech tomorrow. Isn't he, like everybody else, waiting for the jobs report September 3?
Well, I think that's right. I also think if you look back at the minutes of the last FOMC meeting, what did you have? You had the staff telling him that there were downside risks to growth and upside risks to inflation. That's not something he's going to want to have heard. And it's going to be something that he really is going to want confirmation on before moving forward with any sort of tapering talk and the like. I would also add that the Fed had a bad experience the last time they floated a taper at Jackson Hole. So most likely this is not the place where they're going to float the taper more aggressively, simply because of the history.
Yeah. Well, Drew, when you talk about inflation, I want to go back to one of the points you made initially about supply chain disruptions and how this has been framed as a transitory event. It is going on for much longer. People expect it to continue, the disruptions far into next year and beyond. If you take a look at just even how much it costs to ship goods from one place to another, I mean, it's increased in some ways tenfold. So at what point does this not become transitory? Does this become a serious structural existence, a structural pressure on inflation that we have not seen in decades?
Well, first of all, it's a structural pressure on growth, right? Because if you don't have the product, you can't sell it. And so it doesn't show up in GDP. So part of the reason GDP is underperforming is because of these supply chain issues. On the inflation side, I think that's already happening. I think that's what you're seeing in the consumer sentiment inflation readings. If you think about inflation, you can think about it two ways. You can think about it as, prices are going up of things I want to buy. The other side of it is, can I get the things that I want to buy, right? And so really, if you take it more holistically as a standard of living approach, standard of living is going down because these supply chain disruptions mean that you can't buy what you want to buy when you want to buy it.
But Drew, this goes to the whole stag-light or stagflation-like kind of discussion and how the Fed participates in this, right? I mean, if this is something out of the purview of the Federal Reserve, out of the purview of labor markets, how does the Fed respond to something that is pressuring growth because of inflation that they supposedly have a mandate over?
Well, so I think that's an interesting question for Powell, particularly as he's going towards his reappointment or potential reappointment, which is part of the things that they're pushing people to buy ever more goods and services had been a lot of the fiscal support that they've received from the federal government. Do you lean against that, right? Because that's just creating more demand when we're unable to fill the demand we have. It's a real big question for Powell, and it's one he's going to probably take a pass on, quite frankly. He's going to wait this one out and see how things develop. Stagflation light, though, it's a little much to argue. We're at 6% GDP growth, all right? We're expecting 5.5%, market's expecting 6.5%. Let's split the difference. You get 6%, that's not stagflation light. That's a strong economy with a lot of inflation. If you get half that and you're seeing these inflation readings, then you've got a problem.
But Drew, let me take the outlier call. So the EU today is thinking about stopping Americans coming over without having to show vaccination status and things like that, because the Delta variant is getting so much worse in the U.S. How can Jay Powell not address that?
Well, the question is, are people beginning to live with it? And this is where, the ultimate question has always been, what is the end game for COVID? And I think, right. I'm not an expert, but a lot of the experts say it's going to become endemic, right? So, it's not the flu, but it'll be like the flu. There'll be seasonal waves. There'll be all this kind of things. And you'll probably get, vaccinations for it and be able to fight it off. And it'll just kind of fade into the background. Once we all start paying attention to hospitalization numbers instead of case numbers, that's when we'll know it's over from kind of a consumer standpoint. What we're looking for in the near term, though, is can schools reopen and how long do they stay open? Because if schools can't open and stay open, then we're going to have issues with pulling back potentially millions of workers who are associated with that, who are having other issues that require really schools to be open for them to go to work. That'll improve the labor market situation and the overall health of the economy.
There's this awesome, it doesn't apply to me, this awesome study. I don't know if it applies to Tom and Lisa, but it basically says that if you work from home 1 day a week, your productivity increases by 4.8%. How will that change? Actually, if we have this hybrid model of working from home a couple of days a week, how does it change our economies going forward?
Well, I'm not, so I haven't seen the study. I did read the story on it. I will tell you from my own perspective, I'm not really sure how much I believe that people are that much more productive at home. Maybe as productive, I can believe that. I'm not really sure they get a giant boost from it. I think the idea of having time to yourself to think about things is great, but having time to communicate with other people and think about things collectively can also be helpful from a productivity standpoint. And I think, it's not everything is kind of a win-win, right? You're winning something, you might be gaining something, and maybe the net is positive, but you're also potentially losing something on the other side of it. And I think that's why, a lot of firms are kind of leaning towards this hybrid model where, they're trying to get the best of both worlds. And I think that there's a reason for it. And my guess is that, if they thought they could double productivity by having everyone stay at home, I think every firm in the world would tell us just to stay home.
Drew, you had a legendary career at UBS. Optimism, you and Maury Harris just quarter after quarter after quarter nailing the statistics. You're now at a stodgy insurance company, MetLife Investment, and they lean forward and they say, Drew, bonds. How do you advise institutional bond portfolio managers in this crazy bond market with no coupon, with negative yields? What do you tell these people?
There's always a place to look, and there's always something you're trying to achieve. And so it's a matter of what you're trying to achieve. I don't think we're stodgy at all, actually. I'm doing more interesting things here than I did anywhere else.
Explain that. No, there's a stereotype here. Tell us why MetLife, a wonderful August company, why is it not stodgy?
If you look at the breadth of assets we can invest in, everyone thinks, insurance companies and their, investment arms that are related to them is just, fixed income only. And there's truth to that. But, our firm does a heck of a lot in real estate. We do a heck of a lot in agriculture. We do a heck of a lot in privates and doing, structured finance. And our public fixed income team is awesome. And it's you're actually getting, kind of just a much broader view of kind of investments than an investment bank where you're just, you're getting rid of one asset and buying the other, and it's a constant flow back and forth.
Okay, that is how we call a diplomatic answer to Tom's very rude question. How are you not stodgy? You're just a stodgy person.
No, come on,
He's like,
it's a
no, I'm not. I do a
stereotype.
lot of really interesting things.
Lisa,
and you're never stodgy.
Lisa Mattis is talking about real estate in MetLife. The only real estate is if you go over to the benefits page of MetLife, they have Yankees tickets. That's the real estate
Oh, dear
that
Lord,
matters.
Tom.
Drew Mattis, thank you so much. Really appreciate it with
Thank
MetLife investment. Yes, I'd love to see Yankees.
Save Drew.
Red Sox Drew at the end of the year. I'm kidding.
What a way to lobby for
Lisa,
it.
that's really, really interesting. I mean, the institutional pressure, not the retirement pressure, but just what do you do with gazillions of dollars in this odd bond market is not a small question.
And the path of yields in an era of such confusing inflation. I mean, I have never been more confused about inflation than I am right now. The more I study it, the more confused I get, Tom. That has been the case. And when we look at some of the supply chain disruptions, we look at the changing economy in China versus the U.S., and we look at, for example, what's going on with Vice President Kamala Harris over in Vietnam, talking about how to shift around some of these supply chains. I mean, so many question marks. And then has the Fed even engaged with all this?
Right. Francine, is the city open? I mean, Drew Mattis was talking about everybody getting back to work. I was in Midtown Manhattan yesterday. Is the city picking it up again? Canary Wharf and the rest?
The city is open. We used to have something called the pingdemic, which is when somebody tested positive, another 10 people that had any interaction with that person went home. That stopped. So actually, the city is buzzing. A lot more people. No tourists yet, Tom, because of some of the travel rules. But actually, I think there's like 40% occupancy at the moment in the city of London.
Okay, well, we'll continue here. The yield, 1.35%. This is Bloomberg.
With the First World News, I'm Rich Kigup. The US and UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. The Biden administration says it knows of about 1,500 Americans who are still in the country. Japan has halted use of 1.6 million doses of Moderna's coronavirus vaccine. Several vaccination sites reported foreign particles that were found in the vials of the vaccine. There have been no safety concerns tied to the vials so far. Moderna says manufacturing issues arose at a contract site in Spain. Bosses in Manhattan have lowered their expectations for a return to office next month. Cases of the Delta variant are on the rise in New York, and a survey by Partnership for New York City says employers now see 41% of office workers returning by September the 30th. That's down from an estimate of 62% in May. Salesforce saw its quarterly sales jump and boosted the forecast for annual revenue. It's a sign that businesses are speeding up spending and are buying a broader array of products. Salesforce is the top maker of cloud-based consumer relations software. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
The challenge with boosters is knowing who you've already vaccinated, where are the gaps, and how do you administer a second dose of vaccinations. And it requires a lot of micro planning. What's worrying to many of us is going to be that by the time we need the booster, the infrastructure is not going to be there because we're still going to be vaccinating people in the first round.
Bhakti Hansadi, Johns Hopkins University, expert in emergency medicine. There is a nuance, there is a simplicity of the day after day grind of this pandemic. It is time now to talk about the little critters that we are scared of. Stuart Ray is more than interesting. He is in infectious diseases at Johns Hopkins. He is someone familiar with HIV, familiar with hepatitis C, but far more, it's a path from Caltech to Vanderbilt and just bulk research in all of these little critters. Stuart Ray, when you hear the simplicity of the media and the punditry talking about this pandemic, what's the observation you want to tell us about this odd and unique virus?
Well, it's great to be with you, and I have to say that we've learned a lot, and the thing that I think we should understand is we need to use that learning. We know that vaccines are the factor that seems to be controlling deaths and hospitalizations in places where we have high vaccination rates. You look at Iceland, where they've had a big spike, but very few deaths. And then we also know that masks, or actually respirators, are a very effective thing that we've underutilized. And if we just use the tools that we have in hand, we could have a big impact on getting back toward normal.
The hallmark of your work is the mathiness of it. Caltech over to Vanderbilt and that. As you know, these are all differential equations, smooth dynamic curves. Which of the curves is the greatest mystery to you right now?
Well, I think that when we see the downturns in cases and deaths in the UK and India when the Delta variant first came up, we have to wonder what caused that negative deflection after the big spike. And I don't think there's any chance that immunity was the reason for that. That's changing behavior. And I think we underappreciate how important behavioral change is. And when the shock and awe of a big spike happened, people start changing their behavior and we see it blunted. So we need to realize that we need to use that behavior strategically, and we need to reinforce it by making sure that good protections like vaccine and masks, respirators, are available to people everywhere they need to go. We need rapid tests to help blunt that spread, and we just are not doing a good enough job with those things.
Dr. Ray, are we ever going to put our masks away? Are we going to be wearing masks in perpetuity as we deal with an ongoing COVID virus that remains in circulation?
I think that we will be able to take the masks off much of the time in the future once we get to a point where we're sort of in a steady state and we have people protected against the severe complications. Right now, we still have 20% of Americans over 65 who have not been fully vaccinated, and that's a big gap that we need to close. Those people are very vulnerable, and now with the Delta variant, we're seeing more complications in younger people. So we really are not at a place where we can be surprised we need masks because we haven't done a good enough job with the first layer of protection, the one that lasts for months to years, which is vaccination.
And the other side of this is therapeutics, how effective some of these treatments are for the most ill from the virus. Drew Mattis of MetLife, an economist, actually was just on the show, and he had this to say, that when we start talking about hospitalizations and not deaths, that's when we know it's over on a consumer level. How far away are we from talking only about hospitalizations from COVID and not deaths?
Well, I think that we're getting closer, but we can prevent those hospitalizations, which are really the step toward death, with better prevention. The therapeutics we have are effective once people are getting sick, but an ounce of prevention is worth a pound of cure. And when we have someone hospitalized, we're using resources. You see the oxygen shortages in Orlando and other places, and we know that we really are not in a place where hospitalizations are something we can discount. So the therapeutics we have are somewhat effective. We have some new ones that are probably going to come out that'll be a little more effective. So we have some things we can do for sick people. But what we really need to be doing is preventing those illnesses. And we also have to appreciate there are a lot of people suffering long-term complications after COVID that we still have not really gotten a good handle on.
Dr. Ray, I know vaccines save lives, but actually are vaccines working the way they're supposed to if so many people still catch it, maybe less deadly, but still catch it 3, 4, 5 months after they had their both shots?
Well, vaccines have multiple effects. One of them that is very hard is to keep the bug from getting on you. We think about staph infections, and everybody carries staph around on their skin. Our immune system can't keep staph off of us. And I think it's worth thinking about the fact that this virus, when it's in your nose, is on you, but not so much in you. I don't know that we're going to be able to prevent those infections on us, but people who are vaccinated have the virus in their respiratory epithelium for a short period of time compared to people who are unvaccinated or not immune. So if we could get people protected against the severe complications when the virus invades that epithelium and gets inside you and causes the severe complications, we'd be in a better place. But getting the virus to stop spreading really means getting people to shed for shorter periods of time, which means being immune, being vaccinated, because vaccinated people produce virus for shorter periods of time and they have fewer complications.
Is winter dangerous because of further mutations that we could see?
I think that couple of questions is right on point. This is summer, and we can expect things to be worse in winter. They have been in the past, and that seems to be the pattern. We also have to understand that the Delta variant is not a static thing. It's evolving. We see data from the UK and elsewhere showing that mutations are accumulating in Delta. It's finding new pathways. None of those have been a big jump yet. But I think we have to understand that unless we contain the spread of this virus, every time a person's infected, it's a roll of the dice. Those random changes that happen occasionally give the virus a big advantage. And as long as we keep on giving it those rolls, it's going to hit a number that is a bigger problem for us. We don't know that that'll occur. There are some constraints on the virus because it has to be able to enter our cells. It has a certain lock and key function that is constrained. But we've seen it change a lot. And where we thought we were in the spring before Delta really surged, we thought that things would be more normal. Now, Delta's
Right.
changed that game.
Stuart Ray, thank you so much. Dr. Ray with Johns Hopkins, greatly appreciated his work in infectious diseases world acclaim. Lisa, I learned a lot there about, taking it from bacteria and staph over to the virology of all this. It's the granularity that these people are working in is not captured in the media frenzy.
Also, the idea of how much virus becomes contagious, how much do we have to have on us in order to be contagious? I do want to have a surveillance correction. I said that Drew Mattis said that when we start to talk about hospitalizations and not deaths, that's when we know it's over. He said it's hospitalizations, not cases. But this, to me, goes to the heart of how do we know there is an all clear? And what does all clear mean if we still are wearing masks, if we still are social distancing, so we don't get the virus on us?
Let me do a market check right now. Red and green on the screen here. The VIX 17.41. It's really come into a Thursday lull, and of course that's a lull before claims at 8:30 and the Powell speech tomorrow as well. Curve steepening. Well, I'm not going to oversell it. 110 basis points. Somebody emailed in and said, are you having a decaf chai tea? Francine, Lisa, and I. No. There is no decaf chai tea on surveillance.
Espressos.
Taylor Riggs.
No
None
decaf
today.
anything.
Taylor, decaf chai tea. Afternoon.
Chevys, Caddies, gone electric? What's GM's next move? CEO Mary Barra joins David Weston for an exclusive interview Thursday on Balance of Power, live from Detroit. And the conversation continues Friday on Wall Street Week. Coverage begins Thursday at noon on Bloomberg Television and Radio.
there's endless reasons for optimism if, in fact, productivity growth is accelerated.
The powerful growth will continue into next year, and it is still too early to get positioned bearish on the market.
Right now, we're well past the crisis, and the recovery is underway.
This growth could be extended as we continue to deal with the push-pull of COVID.
The big problem, if we don't start tapering, is the pressure of inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on Bloomberg Radio, Bloomberg Television. Farrow on sabbatical. Thrilled that you've considered his new book coming out. We look for that summer 22. I think so. In for John Farrow. Francine Lacroix in London, which is a good and always beautiful thing as well. Lisa, let's get right to the moment here. At 8:30 today, we're going to watch claims. And Lisa, Chairman Powell is going to watch claims.
Yeah, Chairman Powell very much trying to get a gauge of this economy ahead of his speech tomorrow at 10 a.m. Eastern time. I do think there is a change in the tone in markets. We went from optimism to pessimism to now full-on bull. I mean, everyone cannot get bullish enough. And it's unclear what Fed Chair Powell will do with that. I mean, does that give him confidence to taper, or does that make him feel like everything is a go and he doesn't have to rock the boat?
What is the tone on the Bank of England, Francine, in London? Is there a taper frenzy there? I mean, what is the battle with Governor Bailey right now?
There is. So there's talk about a taper, but it probably would not come before the Fed, Tom. But look, the inflation is just very different here because we're contending with Brexit, because there's a severe shortage of actually workers almost for all industry groups. It's drivers, it's people who pick fruit. It's also, the farmers, actually, because of Brexit, a lot of people went back to the EU. And so it's a small open economy, so it kind of comes at the UK from all sides. And the Bank of England is, in a tricky situation. A bit like the Fed, but also even more difficult because it needs to fine-tune its message.
We stop the show right now to inform you of news that matters. Francine, you mentioned in the last hour, there's a chicken shortage?
There is. There's a chicken shortage because of a lack of drivers. So there's I've never brought you to Nando's because we usually go to fancier places, Tom. I know your standards when you come to London, but it's one of the most popular chicken places here in the UK, and they've had to close about 104 stores because if you're a chicken place and you can't serve chicken because there's a shortage of chicken, you're in trouble.
Okay. Why did we have Francine on today? There you are, your chicken update from the United Kingdom as well. We want valuable for radio and television coast to coast in America as we awake. Lisa, what we're awaking to is the one change this week. I'm sorry, the fact is yields elevate.
Yeah, that's true. They do elevate to 135, and that to me is a notable move. What's also notable is we've managed to get new highs every day, almost, although today we are a little bit lower. But the idea here, 51 record highs in 2021, with the most recent one coming yesterday. The fact that this just keeps happening, Tom, this is not, yes, it might be a sleepy market, but it keeps going higher.
It is there at 17.43 on the VIX. I'm using it as a casual bellwether. The pros are looking at other fancier messages of volatility, but it's a VIX that maybe should be 16, and it's not. It's 17.42. Bitcoin under 47,000. It is a plunge. It's a drawdown, I say, on Bitcoin. That'll be chapter, I think, 14 for John Farrow in Drawdown Meditation, the Farrow way. Curve steepening slightly with these new elevated yields. Brent, $72 a barrel. Francine breaks into tears over that statistic. Gold, $17.90 the ounce. And in the currency market, finally, a little fractional give back. I'm struggling here with the data check because it's August. Lisa will save us at the wall.
All right, we were supposed to get a 3-day confab in Jackson Hole. Instead, we get basically one day, or rather 1 hour. We get Jay Powell speaking tomorrow at 10 a.m. People are not gathering in Jackson Hole today. It is virtual, but we are going to get a curtain raiser. Today, we do hear from Kansas City President of the Federal Reserve, Esther George, who is joining our own Michael McKee on this program in about a half an hour time. Interesting to see how she frames this in light of the quick transition to virtual, the increase in Delta cases, and how that might affect policy and the discussions at this meeting. Then at 8:30 a.m., we've been talking about this all morning. We get those initial jobless claims. Interesting to me that Bloomberg Intelligence really put out an economics piece talking about how the decline in jobless claims really puts a spotlight on the real issue in the labor market, which is the friction. Where are the workers? Why are they not coming back to drive those trucks for Francine's Chicken, to drive those trucks for Francine's Milkshakes? Because evidently they also have milkshake shortages. So if you want chicken nuggets and a milkshake at McDonald's, it is going to be
in
a
Liverpool
problem.
because you're saving money.
Yes, exactly. Thank you, Tom. And I'm sure you've done many times again. And then 12 p.m., we hear from General Motors CEO Mary Barra, who will be joining our own David Weston to discuss the path forward for a company that has seen the price of their cars go up dramatically, even though there seems to be a supply chain disruption.
But Lisa, she's got to talk about the electric car. You know, you got to take them into the shop because the battery's going to blow up thing.
The idea here of some of the regulatory scrutiny from the U.S. government, the idea here of what that bar is, if you will, and also what the competition is like at a time when any type of regulatory scrutiny really dampens potential interest.
We welcome all of you on radio and television, and this is the important conversation today of the emotion of what to do. You know the cliche. There's a wall of worry, and Daryl Cronk is esteemed and able to write about it at Wells Fargo. He is their chief investment officer. Daryl, I love your note because you go to the emotion of this. Forget about Febosi, forget about the textbooks, forget about all the fancy stuff. You say, here are the worries. You got to fade these. You got to follow closely these, and you got to fear these. Let's start with fade. What do I fade here on the worries that I can ignore?
Well, I think there's a good morning, Tom, first of all, and good morning, Lisa and Francine. So I think there's a number of them that you can actually fade. This one may be a little controversial, but I think from an economic and capital market standpoint, Delta is one of those. You can't fade it from a health standpoint, but I think you can fade it from the economy. Just note the 20% up in the S&P, 51 new highs that was just discussed. You know, there's some violent rotation under the surface from growth to cyclicals to bond proxies and back again. But beyond that, markets still move higher. I would watch the debt ceiling. I think you got to fear the debt ceiling.
Really?
Yeah, September is going to be a white knuckle event. I mean, you've got a whole bunch of things going on there with the budget resolution. You've got perhaps certainly the debt ceiling, and we're in extraordinary measures. You've got the reinstatement of Powell.
Daryl, this is important. I want to underscore this. September is going to be a white knuckle month at a time when we have all bears basically blown out of the water and everyone trying to get more bullish on absolutely everything. Do you think that this is a problem setting up for sort of a perfect storm, if you will, in the next few weeks?
Yeah, I do think it. I think it's going to be a lot of headlines, I guess is what I'd say. You've got the bipartisan infrastructure package. You've got a $3.5 trillion spending budget legislation. You've got a potential government shutdown. You've got the debt ceiling, and you got the reappointment of Fed Chair Powell, all of which has to get somehow resolved and progress in September. We know where the partisan politics are. So this is a real risk. You'll remember, 10 years ago this month, it was August 2011 when we downgraded the U.S. debt as a result of the standoff. So that had a 24% decline in consumer confidence and a 17% decline in the S&P. So look, I think at the end they do find some resolution, but it's not going to be without some of those white knuckle events. And I think it's going to create a September to remember out of Washington.
I like that, September to remember. Daryl, how much white knuckle events will come from currency volatility? And actually, how will that, if we have a volatile dollar going into a Fed meeting, how much will that liven it up?
We actually think the dollar is kind of in a near-term peak. We think it's in a longer-term kind of channel sideways trend, but a near-term peak with some weakening here, which is part of the reason you're getting a little bit of that bullish sentiment. People are turning things back on. I think what's interesting here, though, is if you get under the surface, right, pay attention. I'm paying attention to high yield spreads and credit OASs. They're up 50 basis points in the last 6 weeks, right? They're quietly leaking higher, right? So we need to pay attention to that. You've got emerging markets are now negative year to date, and you got copper and oil both off double digits from their previous highs. So there are some things we got to pay attention to there.
Daryl Cronk, thank you so much. Too short a visit. We got to do this longer next time. With Wells Fargo, their chief investment officer. You know, Francine, I know that you haven't been doing this with us in the American morning, but there is a pendulum out there, and it is the pendulum of a perfect storm. Farrell just emailed in. He's like doing a Gilligan's Island thing. He's in the Pacific. I don't know, is he in Tahiti or Fiji or?
He's going he's writing his book on meditation.
Yeah, he is, but I think he's drinking Fiji water in Tahiti or something like that.
Try.
Lisa, help me here with the pendulum of a perfect storm.
Well, the idea here of the potential political risk, especially with the debt ceiling debate. Well, that's what he was talking about. And he had, September to remember, a perfect storm. He's got great catchphrases. They'll make a great analytical report. But honestly, you look out over the next couple of weeks, and given how bullish people have gotten, is there that fragility? And we're not hearing a consensus around that at all, actually.
And I know what Francine's going to say, Lisa. She's going to lean back, because I've worked with her for years. Here's Francine. Lisa, have an Aperol spritz. I mean, that's...
Okay, let's hear it.
I mean,
into September.
Francine is
what we haven't talked about?
Please.
China regulation. This has been over the last 2 weeks. It's basically China selling off, European stocks kind of, getting their impetus from China and the Asian markets, and then you buy the dip in the U.S. I don't know how long this lasts into September.
Well,
back to Aperol's, Tom.
I mean, Lisa, again, that goes to the point of a white knuckle September. And to Francine's point, we've heard from Enda Kern and others about the important political meetings in China at the end of this year and into next year.
Honestly, the most amazing aspect of this is it seems like a sea change, and the reaction in markets is, meh, you can get yield. Meh, the Fed will come in. I mean, honestly, it has not been significant.
Yeah.
It's like the Red Sox pitching staff. Let's just cut to the chase. It's going to be the Andrea Gale of Septembers. Of course, that from a wonderful book from 1997. A Perfect Storm, The Perfect Storm. Futures at -4, Dow futures go the other way, up 10. Please stay with us on the equity market. Sam Stovall, CFRA. We do that next. This is Bloomberg.
With the first word news, I'm Rich Kigup. To the US and the UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. The Biden administration says it knows of about 1,500 Americans who are still in the country. President Biden and Israel's Prime Minister Naftali Bennett plan to discuss strategy on Iran today at the White House. Both countries consider that Iran is speeding up its nuclear program at an alarming rate. The U.S. favors a diplomatic agreement to halt the nuclear activities. Israel has said it may use secret attacks. The labour shortage in the UK is leaving consumer businesses pessimistic. That's according to the survey by the CBI. Britain's biggest business group, the survey found optimism at minus 17% this month. That's down from a positive reading of 47% in May. Businesses such as restaurants and bars can't find enough workers to fill jobs after the lockdown. And Bloomberg's learned that Western Digital is in talks to merge with Japan's Kioxia. A deal involving the two chip companies could be worth more than $20 billion. The companies are longtime joint venture partners. A combination would create a bigger competitor for Samsung in the market for memory chips. And shares of China's Evergrande's electric vehicle unit are collapsing in Hong Kong. It's a rout that has wiped about $80 billion from what was the company's most valuable listed asset. Evergrande is the world's most indebted property developer. There's concern the world's most indebted developer will need to sell assets at a steep discount. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From business's most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market?
There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg Television and Radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
At the end of the day, there's got to be good, remunerative job opportunities for middle-class and lower-income Americans paying rising wages. And that's what we have, with a robust recovery behind us, strong tailwinds, strong job gains, wages going up, and very closely connected, of course, to the rescue plan.
Jared Bernstein of the Council of Economic Advisors, speaking of the Biden plan, of course, of $1 trillion or plus overlay expected to be on there. As we spoke to Emily Wilkins in the last hour about Afghanistan, about an eventful day, particularly near the Kabul airport, we now turn to Washington politics with Anne-Marie Horner, our Bloomberg Washington correspondent. Anne-Marie, I look at the infrastructure bill, and what is so telling to me is it's nowhere to be found in the debate of the zeitgeist of the Washington Post this morning. It's as if we had a vote, Pelosi won, and boom, it's gone. How gone is the infrastructure bill until September?
Well, you make a good point, Tom. The papers are just filled with what's going on the foreign policy front with Afghanistan, as well as the Israeli prime minister visiting Washington, D.C. and having a meeting today with the president. But I would also say we are seeing a little bit of scooplets come out in terms of what the House and the Senate and these committees are starting to draft up in terms of language. Overnight, we heard about one about conservationism when it comes to natural resources. Some House Democrats want to spend some $30 billion. Some of that, they would get that money between a little bit more penalties and royalties on oil and gas and pipeline companies. So as we lead into September, you're going to hear a little bit about where these Democrats are moving in terms of what is going to be the details of that $3.5 trillion package, but nothing is going to be set in stone until September.
Nothing's going to be set in stone until September. Well, we got to get to September, and part of that is a constituent reaction. What are the politicians hearing about an overlay of, as Lisa said earlier, $2, $3, $4 trillion of new ideas?
Well, we just don't know yet because every politician is selling it at home very differently. The progressives, of course, are saying we have about 5 agenda items we want to be in this bill. A lot of that has to do with social programs and climate initiatives, while you have a little bit more of the centrist moderates saying Don't freak out just yet. We're still negotiating this, and 3.5 trillion is a top-line figure. Remember, this budget resolution is just a framework of potentially what we could see. No one thinks, and we spoke about this yesterday because I know you had Greg Vallier on, no one really thinks they're going to get $3.5 trillion. That's likely, that number is likely going to come down.
Anne Marie, a lot of this does dovetail into the debt ceiling negotiations that may be a white knuckle event, as Daryl Cronk was saying from Wells Fargo Investment Institute just recently. I'm curious from your perspective how far we have gone in terms of negotiations of the debt ceiling debate, of lifting it or prolonging it to enable the economy not to default, the United States.
It's an excellent question because it's about the fiscal health of the United States, and these conversations have been very muted. Of course, this week was all about the debate within the Democrat Party about moving forward that rule of the resolution and putting a firm date on the bipartisan infrastructure. But when it comes to the debt ceiling, the Republicans just continuously push back and basically consider the conversation mute. They say if the Democrats are going to already have a budget reconciliation program, they need to just put the debt ceiling in that. But the Democrats, especially leading up to the midterm election, don't want to be the ones to have to edit that into their $3.5 trillion reconciliation package, because they don't want it to be seen that they are being reckless with the U.S. finances. They want this to be a bipartisan approach. There is going to be a lot of back and forth on this between September, October, and when the CBO says October, November, the U.S. could potentially run out of those funds. But this is at the moment just completely mute because foreign policy has completely taken center stage in Washington.
Anne-Marie, how much is the president also focusing on some of the cyber attacks and ransomware? So yesterday he met up with prominent chief executives to discuss that. I mean, are we going to see more of an effort after the pretty difficult summer months we've had on that front? Is he going to step up the efforts to try and do a U.S. counterattack?
Well, we had the executive orders earlier this summer from the president directing the agencies to really step up the cybersecurity. And yesterday, when you have dozens of executives coming in, this was really more of a summit, the first start of how the private-public sector can work together. What was so interesting, I think, about his remarks yesterday is that he did call out Russia. He said that we know that some of these ransomware attacks come from the likes of Russia. That was in May. We know when the Colonial Pipeline attack also last year with SolarWinds, and he said that he looked Putin in the eye at this Geneva summit and said, we want you to take care of these groups that are operating in Russia, quote, because you know who they are and you know where they are. So it is a little bit of a geopolitical concern as well for the president.
And there's also an issue of the Afghanistan, just going back to the what largely is thought of as a debacle of the withdrawal and the manner of the withdrawal, not the actual withdrawal itself. And I'm curious, from your perspective, how much the cybersecurity issue dovetails into increased terroristic threats, including potentially stemming from that nation.
Well, I think the foreign policy team in Washington for this administration would say leaving Afghanistan, part of that was to put money towards where the future potentially of those threats could come, like cyber warfare, which over the past year, we've seen a number of attacks from actors, especially in Russia and China. This withdrawal, though, certainly center stage as we have only a few days really to get the civilians out. And Secretary of State Anthony Blinken yesterday saying about 1,500. Key here, though, is American citizen, blue passport holders. There are a number of other people there who also have rights to America who are green card holders. These people need to come out before the military starts to wind down. And right now, from what I'm hearing with people who are also trying to evacuate and journalists on the ground who I know are trying to get family out, is that it is very difficult to get anywhere close to the gates and letting the U.S. military to get on the tarmac to exit Afghanistan. And overnight, in the middle of the night at Kabul, right now it's the afternoon, but in the middle of the night last night, the U.S. Embassy in Kabul released a security alert saying, if you're anywhere near these gates, please go home and we will direct you to the airport, because they're quite concerned about a potential terrorist attack at that airport.
Anne-Marie, thank you so much. Anne-Marie Horton in Washington this morning. On the markets, again, it is a churn to August, awaiting 8:30, about an hour and 6 minutes away on claims. We'll have a lot on this as well. Lisa, we've got some serious anticipation of one of the more conservative presidents of the Fed.
Esther George, she's joining us in just about 5 minutes with our own Michael McKee. Curious to see how she frames out this conference and also what she says about the sudden reversal. I mean, honestly, they were planning Jackson Hole, all of those hotel rooms canceled, all of those flights, just days before the conference, saying we can't do it in person.
Well, no, we can't do it in person. I'm sorry, it is a different conference, and certainly a different conference for the raison d'etre of it, which is the PhD papers and the discussions around those papers, which at time when everyone's together really can get heated. I mean, there can be some real emotion. I saw Willem Bouter once, Francine, almost punched the great 7-8 foot bear out in the lodge. He took a swing at it. He was so angry.
I mean, that's, you know, I'll never forget that image, Tom.
Well, we got
maybe they'll do that with inflation.
Important discussion coming up for those of you interested in the monetary state of the nation. The president of the Kansas City Fed next with our Michael McKee. Again, red and green on the screen. Stay with us. Claims in an hour. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Good morning, everyone. Bloomberg Surveillance. Francine Lequine for John Farrell, Lisa Bramwitz, and Tom Keene. Interesting morning. Yeah, it's August slow. I'm not going to give you a line here, but we're watching the data, particularly of claims here, in exactly 1 hour. Michael McKee will wander by in an hour for claims, add value. John Riding scheduled to be after Mr. McKee. But right now, McKee begins his work at Jackson Hole. The number one issue is taper. No, not the economic taper. The taper of my waist after 3 meals at the Pioneer Grill. Guess what? It's not going to happen because we've gone virtual. McKee is virtual, and the distinguished Esther George is virtual. Let's listen.
We had hoped for an in-person meeting. We had planned that way, knowing in the back of our mind that that would be a function of how the virus unfolded. And as we saw last week, risk levels went up. And in the interest of our guests, we pivoted to a virtual platform. So disappointed, but still looking forward to a great conference. We've got a great lineup of speakers and papers that I think are going to bring insight to an important topic.
Well, you lead into an important question, the latest COVID spike. How do you think that is going to affect the economy?
Well, I think it's a risk to the outlook, but what we've seen so far and what I hear from contacts in our region is the economy continues to grow at a strong rate. Consumers are still spending. The labor market is continuing to heal. We saw good job gains last month. And so the outlook, I think, remains a positive one. We will have to see what impact this flare-up in the virus might bring. So you could imagine that it might slow down some of the returns to the labor market, but I don't expect at this point that it will derail the economy as we saw last year when we first had to deal with the virus.
Do you think it slows down your timetable for when you might want to taper because you might want to wait and get more data?
I think for me, as I look at the progress that the economy has made so far, it really does suggest that we've come to a point where we can begin to ease up on the amount of accommodation provided to the economy. That's different than suggesting that we have arrived at the objectives that we have in terms of full employment and price stability. So I don't think that it changes my own calculus that it is time to begin to make those adjustments given the gains we've seen so far.
Have you gained enough on the employment side, especially in the diversity area? Have we seen enough progress in terms of getting minority unemployment down? What's the labor market picture like?
Well, clearly, we have not seen the labor market fully recover. And there's still slack there when you look at millions of people that have not come back into the workforce, not yet resumed working yet. And as you noted, when you begin to drill down into who's recovering, who's not recovering, we know that there is disproportionate outcomes right now for Black and Hispanic workers. That, I think, is a function, again, of watching how the labor markets heal and how the economy recovers. And to the extent some of those contact-intensive sectors can continue to bring jobs back on, and we saw that last month. We saw leisure and hospitality come in pretty well. If those kinds of gains can continue at a healthy pace, then my expectation is we will continue to see the impacts begin to narrow across many dimensions of the labor market, and that would be a good sign.
Is there any division on the Open Market Committee about when to taper? Wall Street's making a lot out of the fact that some people think we should wait till the end of the year, and some say we haven't seen enough progress. And then there are people like you and other colleagues who say we've made enough progress to begin thinking about it.
So this is a big committee, as you know, and one of its real strengths is the diversity of views it brings to looking at a common set of data. That's a healthy discussion, and you often see those differences emerge at the point that the economy is turning. So it's a healthy sign for the committee to begin to debate and deliberate on those issues. as we judge when we've made progress toward the objectives that we've set out for the economy.
Yeah, I'm just wondering if Wall Street's making too much of it, you know, the idea of whether you say something in September or November, is that cutting the policy too finely?
I think what we've been focused on, and you've seen, is a commitment to communicate clearly, to make sure that we are being transparent about the factors that are being considered for that transition as it relates to asset purchases. And I think that's what's been happening. The markets, the public has been hearing those communications. And of course, we're coming into a meeting in September where we will continue to talk about how the economy has unfolded and the timing for adjustments to those asset purchases.
Interesting story today about how Wall Street doesn't care as much about when you begin the taper as when you end it. What's your view on how fast you would want to get out of the QE business?
So I think it's important to get started, and the conditions of pace, timing of when we end, I think I'm open-minded to listening to the debates around that. But I am less interested in deferring that decision. So I think it's important to really center on when we believe the progress in the economy is sufficient to start that process. And that's really where I'm focused. In that sense, I think we should get started this year so that we can begin to pare back the amount of accommodation, watch to see how the economy unfolds after that, and then down the road be in a position to make decisions as the economy changes on what we need to do with our policy rate.
I'm going to guess that you would agree with Chairman Powell that tapering is not tightening and that the two are not connected. But the way traders see it, you at this point, because of what the chairman has said, aren't going to start tightening until you're done with tapering. So there is a bit of a connection on the back end. And I'm wondering if you agree with the members of the committee who say we should get it done faster than we did last time.
I think there's good arguments for that. Again, depending on how the economy unfolds. The arguments that ending the asset purchases will give the committee some flexibility to judge the progress in the economy. But I don't think that's in any way a mechanical decision and one that we can lay out today, whether it's a certain amount of months. The conditions really that have been laid out in the guidance from the committee has been that we will have achieved maximum employment and price stability objectives when that rate decision is made.
Whatever decision you make about the pace of tapering, you're doing 120 billion a month right now. At what point would anybody even notice in the economy?
Well, I'll be watching for that at the point that begins, because it is a tremendous amount of accommodation going into the economy right now. And assuming communications have been laid out and the committee's response to how the economy is unfolding is clear, you would expect the economy to be able to work through that. And that is my expectation, that with good communication, with clarity around the factors that we judge are pushing us toward our mandates, that will all work out in terms of the economy's ability to absorb that.
The minutes of the last couple of meetings suggest that you've all basically agreed that you've essentially reached your mandate on the inflation side. So I'm wondering where Esther George, the inflation hawk, is at this point. What do you think about the progress of inflation? And do you have some concerns that maybe it's not transitory?
Well, I think watching the level of inflation right now certainly has gotten my attention. It's gotten the attention of many households and businesses in my region that frankly hadn't had to think about inflation for many years in their decision making. So it's not something to ignore by any means. Having said that, I do think that it is reasonable to assume that what we're seeing right now is coming from the combination of robust demand running up against supply constraints. And that, of course, is keeping upward pressure on prices. over time, I would expect that to moderate. And that, I think, is a reasonable assumption to make. But that, of course, will depend on a variety of other factors. To what extent does risk from the virus affect those supply chains? Will they become more persistent? Will it begin to build into people's expectations in a way that will cause us to have to rethink that policy accommodation different than we are today?
You've always been on the lookout for inflation and one of the first to warn about the possibilities. So I'm wondering if you think we would have time, or you would have time, since I don't have a vote, you would have time to react if inflation proved not to be transitory and that you're not behind the curve.
So it's hard to say today, given where we are in this recovery. Certainly, the committee has the tools it needs to respond to inflation. That, of course, is always a function of understanding what's going on in the broader economy. And it's hard to judge, but I think no one should question that the committee is committed, that I'm committed to a 2% inflation objective over the long run for the economy. And we'll just have to see how this transition in the economy from a terrible pandemic shock to beginning to recover from that unfolds.
I have to ask you one last question on a fiscal side. Leaving aside the merits and the partisan issues involved in the budget that was just passed by Congress, do you worry that billions more, hundreds of billions of more in spending would be inflationary?
So I think the question of fiscal spending is one that I'm going to defer to fiscal policymakers to judge. I think as a monetary policy maker, I will be watching carefully any number of impacts to our economy, including fiscal spending, to understand how it might change the dynamics for how we achieve the objectives that Congress has given us.
I actually have one more question, and that is, you talked about the great guest lineup you have. There's one in particular that everybody wants to hear from. The minutes of the last meeting said no decisions were made. So I'm wondering what we should expect from the chairman. Is he going to be giving us guidance or opinion?
Well, the chairman has not shared his remarks with me, so I could not honestly tell you what he'll be offering, but I'm sure it will be worth listening to.
From the Midwest, Esther George in the Kansas City Fed, and a decidedly different president of the Fed. She does not have a PhD in economics, think James Bullard and many others who do, but just a simply different path replacing Thomas Honig at the Kansas City Fed. Our Michael McKee joins us now as he launches his really intense coverage of this event. I got like 8 questions and no time for him. I got to get breakfast at the Pioneer Grill virtually. But Michael McKee, I really want to go to the voice and place of Esther George in a Washington fixated by Powell, Brainerd, Clarida, and DSGE theory. It's different out in Kansas City, isn't it?
This is one of those times when the Fed Bank presidents add a lot because they are on the ground. They can see what's happening, particularly with COVID in their districts, and they talk to CEOs and companies all the time and find out what they think is going to be the course of the economy through the disease, and also whether or not inflation is going to be a major issue. And if Esther George, who has always been an inflation hawk, isn't particularly concerned, then there's probably not a lot of concern out in the Kansas City district.
The inflationistas are in retreat. She was never an inflationista, to be clear on that. But define a hawk right now. I don't think we know, do we?
It is angels dancing on the head of a pin. A hawk.
That was almost the name of the show. Be careful.
A hawk is somebody who maybe wants to taper sooner. And right now, you know, we're talking December, November. So if you're talking about September announcement, it really doesn't make that much difference. They're all kind of in the same boat at this point. There's less disagreement, and you heard her answer my question on that, than Wall Street would think.
Although I will say her answer to your question about making the conference virtual also interesting, basically dismissing longer-term implications about how this may affect their policy decision-making. Do you hear that consistently from others on the Fed, that basically this is just a circumstantial issue having to do with an idiosyncratic patch of virus cases in the region where the conference was going to be held?
Yeah, that's what you hear from Fed officials, although they caveat that with we have to see, because nobody quite knows where this virus will take us next. We didn't anticipate this Kansas City Fed symposium being canceled. So there is a general feeling that we're going through another wave, but the country has changed. We're not going to lock down as much, so maybe the economic impact isn't going to be as great.
Michael, in your great conversation with the Fed president there, how much did you feel she was weighed down by the worry of doing a misstep at this point in time because of where markets are?
I don't think she's particularly worried about that. I think the focus is going to be on Jay Powell and what he says. So the Fed bank presidents, Wall Street understands they all have their own opinions, and they've expressed them at great length for many weeks now. So the idea is leave it to the chairman, and we'll get whatever takeaways from his views. The rest of them are just kind of reflecting what they have learned in their own district.
Michael McKee, thank you so much. Greatly appreciated this morning. And again, McKee will be here in 44 minutes, 7 seconds to give his jobless claims as well. Looking forward to John writing afterwards. Lisa, I find fascinating here at Jackson Hole, and I've always complained about this. Tom Honig once punched me, hit me right here.
Yeah, with the bear.
They don't release the papers until they come out.
Yeah, I agree.
Which I just can't stand. I want to read the papers. McKee, let me rephrase this, folks. There's like 8 papers, Lisa.
I know exactly what you're saying.
And I go to McKee and I go, which one should I read? And McKee tells me which one to read, and I read it.
Hold on a second. Do you read it front to back, or do you read it the first
It depends
few
if
pages?
I read it at the Pioneer Grill, printed out over, the Pioneer Grill breakfast, if I'm not having the Lager Swiss breakfast.
Yeah.
And other than that, I read it on a couch next to tourists.
So I got to say, I actually was very interested by certain aspects of that interview, in particular, how Esther George dodged certain questions, such as the fiscal stimulus question, the idea of, well, that's not our job. We look at everything that could potentially come up that has any ramifications. We take everything into account. How much can we absolutely learn as the Fed looks at a scenario where they're still weighing all risks, Tom?
Yeah, it's very, and Francine, the process here is so different from the Bank of England. I mean, it's to me almost, over here at least, the Bank of England has almost been removed from the debate, and I know that's unfair.
Well, no, I don't think it is unfair, actually, Tom. When you look at, the differences between the Bank of England and the Fed, look, you have a lot more to contend with. One of the things that we keep on hearing from the ECB, which we also heard from Philip Lane yesterday, is that they worry about when the Fed starts. And there was a great piece by Liz McCormack saying, actually, we focus so much on when tapering starts, we forget on when it ends, and that will be crunch time for the markets. But the ECB is looking at some of the spillover effects of when that starts in the U.S., and so Europe is kind of following at this point.
Red and green on the screen right now, the VIX 17.31. On radio, on television, stay with us. Claims in less than 45 minutes. This is Bloomberg. Good morning.
With the First World News, I'm Rishka Gupta. Rising coronavirus cases are limiting what Fed Chair Jerome Powell can say about what's next for U.S. monetary policy. Powell speaks tomorrow at the annual Jackson Hole Central Bank Symposium. The conference has been turned into a virtual one this year. Powell's expected to reinforce the message that it will probably be appropriate to begin scaling back the Fed's bond buying program by the end of the year. The US and the UK are warning their citizens still in Afghanistan not to travel to the Kabul airport. They say there are threats of a terror attack. British Prime Minister Boris Johnson discussed the evacuation today.
I think we have to be transparent about the risks, and we have to be realistic about what's going on. And you'll appreciate that there are Islamic State Khorasan province terrorists out there.
The US says there are still about 1,500 Americans in Afghanistan, but many apparently don't wish to leave. Bosses in Manhattan have lowered their expectations for a return to office next month. Cases of the Delta variant are on the rise in New York, and a survey by Partnership for New York City says employers now see 41% of office workers returning by September the 30th. That's down from an estimate of 62% in May. And Japan has halted use of 1.6 million doses of Moderna's coronavirus vaccine. Several vaccination sites reported foreign particles were found in the vials of the vaccine. There have been no safety concerns tied to the vials so far. Moderna says the manufacturing issues arose at a contract site in Spain. The speculation that Bitcoin's 60% rally since last month's lows is running out of steam. The cryptocurrency's burst above $50,000 didn't last long. Bitcoin and other tokens are lower today. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The reality is most of our critical infrastructure is owned and operated by the private sector, and the federal government can't meet this challenge alone.
Good morning, everyone. We greatly appreciate your attendance. The President of the United States speaking, advancing the story forward as they see it, as we've heard from Ritika Gupta, Anne-Marie Horton, and Emily Wilkins. It is a really, really dicey time in Afghanistan. We'll be following that through the entire morning as well. What you need to know, and you take the subway. You don't take the NRBQ, you take the NQRW. And if you're up by Central Park, you're at Nordstrom's and their swanky new store, which I think pretty much everybody said has been a colossal failure. And you wander down on the NRBQ. No, that's a music joke, folks, it's before Lisa's time. You wander down on the NRBQ with David Wilson to Macy's at Herald Square. And the distance, 12 minutes on a bus, has never been greater. I mean, it's stunning.
Yeah, not in the stock market anyway. I was just struck by the reaction among investors to those two companies' results. And I actually threw Kohl's into the mix just so you could have something to compare against historically, because those are the only three department stores in S&P's benchmark U.S. indexes. You got Kohl's and Nordstrom in the mid-cap 400 and Macy's in the small-cap 600. But I got to tell you, 37 percentage points difference, because you saw Nordstrom's go way down yesterday after its numbers. After last week, Macy's went way up.
You look like Dana Telsey. Give us a securities analysis on this. Why?
Well, it seems to me, they're much smaller companies now than they used to be, if only because...
David, you just throw out a shoe. All you do is mention a brand, and that gets you the difference. What's the brand difference between Macy's and Nordstrom? Valentino?
I don't know. I don't shop in those stores all that much to know the brands. It really more comes down to the fact that these are smaller companies now, because the industry has really been hit by the rise of Amazon as much as anything. And as a result, you have stocks that have become more volatile along the way. You go back 7 quarters, the gap was 30 points top to bottom in terms of stock market reaction. They're just more volatile companies now, given what's happened to retailing. And of course, you throw the pandemic in, and you can argue that's really heightened.
Yeah, well, I will say, Tom, by the way, Dave Wilson's not a Nordstrom or a Macy's guy. He is a Louis Vuitton kind of guy, I think.
He's very Louis Vuitton, yeah, absolutely.
Louis Vuitton. There is a question, though, of how much there has been a shift away from brick and mortar and now kind of back to brick and mortar, with even Amazon opening some stores, distribution stores, but also just, this emphasis on a multifaceted storefront that can also do everything in terms of deliveries and pickups. How much have these stores adapted to that, and what kind of traction are they getting?
Well, I believe the word you're looking for, Lisa, is omni-channel. That's sort of the jargon of the industry, the idea of being able to buy online and pick up in the store, or whatever you choose. You do it all online, do it all in the store, doesn't make any difference. And, to some extent, these companies have adapted to that, made the convenience more of an issue for themselves, and therefore, making shoppers happier. So, they have adapted to some extent, but the idea of Amazon sort of going in the other direction, tells you that there's value in actually being in a lot of places, so people can pick up stuff, even if they order it online.
I don't care. Did you ever see NRBQ, the New Rhythm and Blues Quartet?
I can't say that I did.
They were phenomenal. I saw them at the Dockside Inn in Newport, Rhode Island. It was a small gig for them. These guys are from Kentucky, and they ended up at the Record Plant in New York. Really, it was like an original blues thing, NRBQ.
Yeah, I'm sort of familiar with the music. Not enough that I could spout you titles off the top of my head, but...
Okay.
I have heard
Do you
of
like I did the bus there from Nordstrom down to Macy's?
Yeah, I like that.
He needs an ego boost. Come on.
Now you have to figure out how to make that bus stop at Kohl's. and
Lisa, have you
got it
been in
all.
the new Nordstrom at Central Park? I haven't.
No, I haven't. I have to
I
be
don't.
honest.
I think like someone like Vanessa Friedman at the
Guys.
Times or others would say it's not working.
Yeah.
Francine,
Tom,
help
if you
us
believe,
here.
if anybody, Tom, if anybody believes that you take the bus anywhere, then they'll believe anything. Treasury's at 5%.
Well, I will say, maybe you're talking about the band. Can we talk about ever have a drink of ouzo?
Ouzo?
And then go out and play?
Ouzo and luxury shopping.
I wouldn't know anything about
Probably don't go ahead.
having ouzo and playing really not very well.
Anyway, I will say it is interesting to see all of these transformations and how quickly they've been moving. And interesting that Dave also pointed to retail sales coming down. We're going to be getting some spending data tomorrow, in addition, just ahead of the Powell speech. So interesting to see if we continue to see momentum there, Tom.
Yeah, we will. In the next hour, Sam Stovall with this is important. We've done a lot on equities recently. We're going to get a reaffirmation, and Sam Stovall's never a super bull, super bear. He's going to look at the underpinnings of the market. That will be must listen, must watch. Claims in half an hour. Stay with us. This is Bloomberg. Good morning.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration.